Excellent. All right, so let's get started. You guys all ready? All right. So basically, we talked last time about the state of the mortgage market, and we're going to cover the state of the overall market right now. Is the Fed helping or hurting? We'll talk about forbearance, and Chase is going to go into some good detail on the forbearance part. Is it beneficial to you? Should you be doing forbearance? And what's on the horizon for the mortgage and real estate industry? And that's going to be Caroline there talking about that. But really, what we did in the first one, we talked about you guys taking the buyer contract to close. We talked about the cycle, the life cycle of a mortgage, and we went fast forwarded to March when FEMA declared a disaster with the biological reasons, and they really talked about corona for the first time. COVID for the first time. So they did that. All of a sudden, feds have to drop rate by 1%, really kind of screwed up the mortgage market there for a little bit. And then we had some of our industry powerhouses talk to the feds to help out and help them make things back to current again. There was mass hysteria. We know everybody was hoarding toilet paper. They were also hoarding interest rates back then. There was also something called the VIX, which is the volatility index, also known as the fear index, that went through the roof. So that was a big deal in that prompted a lot of margin calls for lenders. And that's now why you're seeing lenders pull back a little bit. That's why FHA, you're seeing some lenders that are wanting to go. As a matter of fact, Chase announced they won't do anything under 700, right, guys? 700 credit score is what they want on their loans. So, and they want 20% down. So we'll talk about some of that as well. During the time in the beginning, the feds kind of miscommunicated forbearance, and there's still some of that miscommunication going on out there, a misunderstanding of exactly how that works, and we'll cover that as well. There's some lenders in the market that all of this noise has prompted them to not lock interest rates until a home buyer his loan has been approved. What happens if actually interest rates go up on that home buyer or something? We're not expecting interest rates to go up, but at the same time, not getting locked in until they're approved, that's tough, or cleared to close on some cases. So we also talked about you guys as real estate agents communicating with your lenders. Now, let's get into today. So really the big things that we want to cover today is what's going on with forbearance. Is it going to be a good thing for home buyers? What's trending in mortgages? Well, let's talk about that, Chase. Interest rates, what are we doing as far as underwriting guidelines? Is it getting more difficult for home buyers to qualify for homes? But let's start out with forbearance. Does that sound good?
Yeah, so Mitch, and everybody out there, the forbearance got thrown around very quickly and became kind of a buzzword. And everybody thought, hey, free money. I'm going to get to skip my payments for 96 months, 12 months in some cases, depending on who your loan is with. But what most people never understood and still don't, hopefully before they sign that piece of paper, they'll understand, is that there's really two main kinds of forbearance, where at the end of, let's just say, the 90 days, all that payment is due immediately on day 91. So your current month plus the 3 back months, they're all due. So if your payment is $1,500, now you owe them $6,000 day one. You got to write that check. That's a tough pill to swallow for most people. The other side of that is your payment increases. So let's say you take a 90-day forbearance, and then once it's over, your payment goes from $1,500 to $2,000. Well, that may be a little easier to swallow, but it's all got to be current come January 1. So if you take that payment all the way to October, you've got November and December to make the entire thing up.
So you're saying basically kind of like an escrow account where you've got a shortage in your escrow account, you're having to catch up on those back payments as well.
Mm-hmm. Absolutely.
In the event that you can't pay the whole thing right up front.
Absolutely. That's exactly what ends up happening. And unfortunately, they used the term forbearance and really told people it was more like a deferment where, the payment kind of gets wrapped at the end. when you sell the house, it gets taken care of. When you refinance the house, it gets taken care of. But that's not really the case with forbearance. Forbearance is not free money. It's not forgiveness, and never will be. It is, you have to pay that back, and you have to be current by January 1. So whether you pay that out in multiple payments or you make a one lump sum check, that's going to be the case for forbearance, unfortunately. And they're not really telling people that before they sign on that dotted line. So unfortunately, for people that are really in hardship, and truly need more of a deferment kind of situation, they're going to be even worse off come 90 days, 6 months, 12 months, because at that point they're going to have a bank tell them, hey, we need our $6,000. And they're going to say, well, I've been out of work this whole time. That's why we went into forbearance. And they're going to say, tough nuts. I need my money. I mean, I hate to put it that way and be so blank about it, but I mean, that's pretty much the case.
Yeah.
And it's going to be a rude awakening for a lot of people that didn't read the fine print, unfortunately. Caroline, go ahead.
Yeah, I just wanted to, I think what Chase is trying to say, I totally agree with him, and that the biggest misconception is that forbearance is forgiveness. I think as a community, though, of agents and lenders, I think we need to be very careful to make sure that we almost discourage it unless it's absolutely necessary, because it isn't a forgiveness. There is going to be a cost to it. I have a link, and I can send it out to, I don't know who sends out these emails. I don't know if it's Mitch or Aaron or whatever, but to you guys, that I got. It's from the CFPB, and it's a great little video that actually talks about the CARES Act, right? And what does forbearance look like for all the loan types that the Fed has involvement in, right? Which is everything like your FHA, VA, conventional Fannie Freddie loans, USDA. So they all fall under the CARES Act protection, okay? So where a consumer can request forbearance up to it's 180 days, which that is that six months? Yeah, 6 months. And then you can actually request an extension if still needed for an additional 180 days. Okay. Now with all of that said, yeah. So that's pretty strong. With all of that said, though, we still want to encourage our spheres to reach out to their servicers and see how does that look like, because like Chase pointed out, it's not forgiveness. It is going to be paid back, but there is no set standard as to how that is paid back. And that's where you have to have that dialogue with your servicer. Everybody is going to be different. So very, very important that you do that. But again, I say, only use it if you really have to, because it's still, you're just moving money around. It's still money you've got to pay. It's just how and when, but it's for those that really need it. And that should be utilizing it. But I'll send that video link. It's literally 3 minutes and 45 seconds. It's the from CFPB, that's the Consumer Financial Protection Bureau. Their main job in our world is to protect the consumer. So it's a very valid video from direct the horse's mouth. And I think every realtor, every title company, every loan officer should send this video out to our spheres, because, we can't trust the media to give us sound advice or even to give us the facts, because they are not doing that. We're so lucky in our industry that we have an Aaron and Old Republic and lenders that are willing to really out and share the facts, the reality. And that's what we need to be communicating, not letting our spheres listen to media, because they have no clue what's going on. They sell fear because that sells,
ratings,
TV time, right?
Mm-hmm.
And so that is, and they're not accurate, unfortunately. I mean, I hate to say that, but that's the reality. So, that's my 2 cents on that. But yeah, I will send that link. Even if you just sent one sentence out to your sphere, hey, if you're considering forbearance, don't do anything before you watch this video.
Definitely.
And I think that would be a great value add for everybody and anybody.
I think we're hearing this morning, Caroline, that Fannie Mae has upped their projection of how many people are going to be filing forbearance or going into forbearance. And they went from 4% to 15%.
Yeah.
And now what happens with that? And we're hearing also that Fannie might not allow somebody to get a mortgage or buy a new house, and if they need a mortgage, until all of that forbearance money is caught up and then they have to wait 12 months after that, right? So
They'll
if
be
you're
more
not
behind.
actually in trouble, or your
Yeah.
clients aren't actually in trouble,
Mhm.
financial trouble, they shouldn't be going into forbearance, because that could really hurt them, their purchasing ability over this next period of time, especially with interest rates so low and the deals on real estate that's going to be coming up. So it's a big deal. Like Caroline said, is to advise your clientele about that specifically.
It really should, Mitch, be considered the absolute last resort.
Yeah.
You know, I mean, used to we talked about a loan modification being the last resort, but this animal is entirely different, and if you treat it wrong, it will bite you before you realize. And unfortunately, the effects of that, like you said, are much longer than most people even understand.
And you know what we should add, guys, to this conversation real quick is you're seeing now lenders there's going to be a new disclosure in our packages now that talks about the COVID and the forbearance problem. So the consumer we already have, Aaron, you know this, in our packages where it says, if you lie on your application, it's a felony and blah, 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 you can go to jail, you can pay a lot of money. Well, it's kind of similar to that. It'll actually state that in the disclosure, but it's basically saying you're not lying about your having a job at the time of closing, that you still are employed, nothing's changed. And then on the same disclosure, it says you are also not planning to go into forbearance in the next 60 days of closing on your home. So they're actually signing that. And because this is such a huge problem. I mean, you can see if just now Mitch shared that the Fannie and Freddie are saying they upped it from, what was the percentage, to 15%? Like
4% to 15%.
Yeah, double digits.
Wow.
So, and that's still, I bet you might be conservative. Who knows? We don't know. But it's pretty drastic. So yeah, it's a serious thing. And like I said, lenders are out trying to protect themselves and the consumers, because I mean, as a consumer ourselves, who would want to buy a house and then not be able to pay it? And you're going to go into negative equity even if you are deferring your payments, you're going to owe that money later, so yeah.
Oh, yeah, the interest is still going.
Yeah.
So
go ahead.
lenders are having to pull back. So what are you seeing, Caroline, and or Chase, on approvals, loan approvals with all of this stuff, especially us having to get verifications of employment the day of closing? Are we seeing some tougher approvals out there?
Well, I will tell you that as far as FHA is concerned, they've actually, so, our company, we used to go down to 580 on FHA, right? We did 600 very easily all day long with pricing, which was still very good. But now it's at 640 minimum, and FHA has actually fallen in line with that. They're saying, we also don't want to insure loans that have a credit score below 640 either. And again, that is because of the potential risk of the forbearance, right? And traditionally, FHA had, the buyers were, I guess the thought is that they have also jobs that may not always be essential to our community, even in a COVID type of a crisis, and have potential of losing it. So they've kind of tightened those restrictions. We're still having challenges with jumbo loans. However, with that said, like Mitch talked about last week, we're being very creative with the jumbo market. Depending on the scenario of our buyers, we may be doing, 80,
80-10-10s,
first and second liens, high balance. We might be looking at high balance type loan options. If they have a good amount of assets, we may, try to bring them down to a conventional loan amount. There's just a lot of different ways. We're having to be creative, and this is the environment we live in, where we're having to be creative in how we work together and how we see each other and how we communicate. And jumbo is still a tough market right now. It's changed because of this COVID, but again, we're very creative, and we can usually get them done. It won't be everybody, but
Yeah.
just it's a case by case. I
Well,
think
Definitely.
conventional is pretty much the least amount affected. I'm sorry, Mitch, did you want to say something?
What about first-time home buyer programs?
Yeah, so the DPAs, those programs right now are on hold. And believe it or not, this is kind of crazy. This helped the lower score borrower, and now they've actually raised their credit scores. The down payment assistance now have a minimum credit score of 700.
Oh, really?
Which, yes, has fallen in line with actually what Chase put out there. And again, I think that is to slow down, and they're kind of seeing lenders have said, even before they raised their credit scores up, the DPAs did, that we're going to put you guys on hold right now because we don't have anywhere to sell these to. Like, we're kind of at a stop on the DPAs. But now the down payment assistance programs have also said, well, we're going to raise our bar as well too. But they can raise it to 800. It doesn't matter if lenders are not doing them because of risk.
No.
There is no DPAs right now. That's pretty much, I think, the market. So we have to have a different dialogue with our buyers. We have to talk to them about budgeting, about planning. We're going to have to really work with our realtors closely to create, get them closing costs where they can, cover the closing costs by the seller, and maybe we can get them to save money and get a gift from a relative to come up with their down payment. We're just going to have to work a lot tighter. I mean, we always have done that, but now more than ever, we're going to have to do more of the negotiations.
On that note, Caroline, it's worth just pointing out that Old Republic Title will run net sheets for our realtors to provide estimated proceeds to their sellers. We need to gather a little bit of information from you, obviously, but that can really help as they're preparing and helping them decide if they're going to reduce their price or, it just helps with negotiations. So reach out to me if you'd like to take advantage of that. Okay.
Awesome.
That's an excellent service.
That is really great.
Because we're always looking, how much is this borrower going to net from the sale of this property so we know what he can put down on the next house. So that's huge. Chase, you were going to pop in there with something there a second ago, right?
So interestingly enough, I was looking at figures this morning to kind of caveat off of what Caroline was saying, is that due to the creativity that lenders are having to go through to get, these jumbo loans, or not jumbo loans, but houses of that price range done, it's actually grown in percentage wise more, that price range, the 500,000 to 700,000 price range, than any other price range in the market in the last 60 days. So
people are finding deals out there then.
People are finding deals. And so this is kind of what we're finding with all of the lenders having to restrict their criteria and the CFPB easing disclosures timeframes. We're finding this, I don't know if you want to call it a loophole, but I mean, we're finding a way to actually still work the deals that are profitable for everyone, mainly the client or the borrower, and able to get these deals done not just a little faster, but a little more creative. So more people are actually able to be using them, I guess, honestly, for lack of better terms. We're finding ways to get more people into those deals by having to be more creative at this point. So,
we're talking about some kind of downer stuff. Don't get me wrong. While interest rates are low, but while credit scores are having to be higher, debt to income ratios are having to be lower. Let me share some information with you that it's really not impacting us as much as you'd think. Our company right now, in, April, we closed $5.5 billion in loans, right? Last year, the same time in April, we closed $2.94 billion. So
wait, you mean when the market was at its highest, Mitch?
Yeah, when it was at its highest. So this year to date, we've closed $15 billion in revenue, in business. And last year through 2019, at the same time, we did 8.6 billion. So that's showing you there's still deals out there. There's still people out there. It's just a numbers game. You've got to go find more people, right? So let's talk a little bit about where we had a question about what's going on with interest rates, and we want to talk a little bit about whether or not the Fed is helping out. So let's get there real quick, and I will show you where that's at. Can you guys see this screen?
Yeah.
Okay, excellent. So this is mortgage-backed securities, and what we saw here is the fall off. Once the volatility index skyrocketed, the market fell out. Here's where interest rates started really going up, and it was 1 week to a next. We didn't know where interest rates were, but once the Fed jumped in, and our representatives from the mortgage industry that helped out the Feds figure this whole thing out, then we see from the time that all got done, mortgage rates have they've traded straight across really, really evenly. So they've done the Feds have really done an outstanding job of stepping up, buying mortgage-backed securities and filling the void that was left when the money left the market. So today they're going to be looking at buying $8 billion worth of mortgage-backed securities. I think it was yesterday they were thinking about doing 7.8 billion, but they did 7.5 billion. So they continue to do a very good job. So to answer the question about where are interest rates going, we're seeing them hold fairly steady right now. There is some talk about possibility of more downward pressure on interest rates, which could drive them a little lower. But right now they've just been trading straight sideways. And Chase had some information to talk about on stock market and things.
So right now we're at a 7-week breaking record of the S&P since its peak, since its last peak, okay, which was
here
I think February.
Yeah, back in March.
So since its peak, okay, its previous peak, this is the 7 best weeks the S&P has continued to rise in history, week after week after week. And a lot of that is due to the fact that we have this pent up aggression to go and spend because we're not allowed to. We've been stuck at home. We've been unable to go to the stores or the movie theaters or the restaurants or whatever. So as that frustration continues to pent up, and as all of these companies continue to reduce the fat of their spending, they're putting money back into the reserves. That way, when everybody's done with Rona, we can all go spend that again. Interestingly enough, for a long time, we believed that the millennial generation would take another 5 to 10 years to become the dominant buying force in the housing market. And that's not actually true. March's report came out yesterday and said 38% of the market are millennials, beating out boomers by 33% and Gen X at 23%. So the market for them is there at 70 million strong. Do not discount your younger generation. They are buyers.
Here's the statistical data right here, this is just for Harris County. So if we're looking at who's buying homes right now, because of the population growth in the 70s, what was it, 70s and 80s? I would say it was. Here you go. The ages between 27 and 35 are your biggest buyers out there.
Yeah.
So this is specifically Harris County. Then we've got our MSA for Houston, Woodlands, and Sugarland. Let's see if we've got those same numbers for that. I don't have the numbers on the home buyers, but it's going to be about the same, right along with what you're talking about with millennials.
Yeah, across the board, man. Millennials being the largest generation, surpassing or the baby boomer generation by almost 12 million births. It's a force to be reckoned with. Even if half of them never buy a home, more people will buy a home than all of Generation X.
And that birth rate jump went on for what, 5-10 years back then?
Mm-hmm.
So are you saying that we really have a strong market coming up for the next 5 or 10 years?
Not only do we have a strong market for the next 5 or 10 years, but we will have, for the next 5 or 10 years, we will have a lacking in building. So baby boomers are aging at home. Instead of going into retirement homes, the new trend is to age at home. So there's a lot less houses out there. So prices will continue to trend up, and more buyers will come into the market over the next 10 years. Every year, we will see a constant increase of more people wanting to buy, needing to buy, wanting that first home, the second home, the vacation home, as the markets continue to rise and climb. Less homes are being built, so there's going to be a huge building boom in the next 2 to 10 years, and another buying boom over the next 10 years due to the sheer volume of buyers.
So I think that this kind of solidifies that for you, because it's actual homes being built here. Here's what's being built, and here's what's needed.
Right,
So
absolutely.
Supply and demand right there.
Yeah.
You know what's interesting about Harris County too? I was talking to a couple of agents the other day. One of them was, "Hey, I'm doing really well." The other one was, "I'm not doing anything." So she said, "What do I do?" And I said, "Well, let's talk about it over the weekend, and we can kind of talk about it." But here's the thing. In Harris County alone, we've got 470,000 renters that can afford to purchase a house. Just got to find them. Just got to get in front of them, right? So there's enough business out there to still go out, and they're going to be finding a lot of great deals on homes. There's going to be some listings that are going to go up, and it's going to be good. If you're out there making it happen, you will be fine.
Yeah, if you're out there to win it and you're willing to push and do the marketing and not just sit on the couch through Corona, then, you know, you're going to be a top producer. You know, there's too many people out there that need and want to buy a home. They just need you. You just got to get in front of them.
Let's see here. Pending home sales came out yesterday, I want to say. Is that right? So
yes,
that was down 21%, but at the same time, that's big time about Corona. You know, people are sitting right now waiting. So there's no real showings at the time, right? Then we've got the job losses, credit tightening. But like we said, it could be a great opportunity for people coming up and buying. And that kind of takes us into where are we going in the market. I just want to show this little piece, and I'm going to let Caroline take over with this, because where we're going in the market, if we're looking at appreciation rates, like I said, home sales are down about 21%. So this is the forecast of appreciation. You can see the average per year historical over the last 60 years in Houston and Harris County was 3.5%. For the last 10 years, 4.07, and then last 5 years was 5.1. So we have had an outstanding appreciation growth for a long, long time here. We're going to see over the next year kind of a pullback on that. So, but after that, and we slingshot out of this long stretch that we're in now, we're going to slingshot out of that. The forecast over the next 5 years is going up about 10%, right? So this would give you an idea of a median home price of $262 in Harris County. 5-year gain on that property. When you first buy it, it's going to be that $262. You might have a little regression next year, but then after that, over your 5-year period, you're back up at $288. So looking good. Caroline, what are you seeing, and where are we headed? What are you seeing in the market coming up?
Well, I think the horizon, I love that word, what's on the horizon, you know, it's just so optimistic. I think it's all what we're going to make it individually, really. I mean, who can predict? I mean, we have a lot of data. You guys shared some great statistics there. Those are the facts, right? That is what the numbers are. But what do you do with the number? So what? Prices are going up, they're coming down. You know, we got a lot of homes out there. We've got very few homes, low inventory. Who's selling these homes for the people that are out there buying what's available? And I think that's the question is what's on our horizon, my horizon, Mitch's horizon, Chase's horizon, each individual, Blanca, Annalie, whoever is on this call, like what is on your horizon? What are you going to do? And I think at the end of the day, that's a call that we have to make. But if you've been incubating with COVID, sitting behind the scenes, waiting for everything to go back to normal, you're probably missing out on a lot of opportunity right now. So some of the things that I talked with my coach this week that actually that he mentioned to me, and I thought, wow, this was a kind of a really cool thing. He's a coach and a mentor I've known for years, and he said, this is actually a really good time to go and look at your social profiles, your website profiles, your about me. He says, if you're not relevant to today, and you're just, promoting the same old kind of flow, our society has changed now. Who they work with is changed. And so, look at your about me. Is it relevant to today? Are you talking to, so what's on the horizon is make adjustments to your business, because we are going to come to on the other side of this. Right? We're going to come to the other side, and it's going to be booming, like Chase pointed out, and Mitch's numbers. There's going to be so much business for each of us. But, how do you stay in front of these people, and how do you stay relevant, and how do you communicate with what's going on? Are you going to be someone that was compassionate, was value adding, helped our community with good, solid information? Were you positive? And where do we find you? If you're incubating, nobody's going to find you. So are you on social media? Are you making videos? So I told Mitch I had some ideas that I shared with some of my realtors and that I coach, and I thought I was going to share it with everybody. And I have a handout. I'll send it to you guys, whoever wants it, so that you don't have to take notes. But as far as, how do you stay active and in front of your people? So go through your social sites, your about me's, your profiles. So that's number one. How is it speaking to the public today? Do you need to make adjustments? And again, this just kind of was a revelation that I learned from my coach this week. So I'm having to do this for myself as well. But it's really, it's legit. It's truly, our world has changed. Our world is also hurting. People have lost family members to COVID. People are losing jobs, their livelihoods. So there's a lot of pain and everything. So how are we relating? Are we out there going, yeah, time to buy, rates are great? That's not really what you want to be talking about, right? The rates are great, but again, it's the contextualizing that message, how you're sharing information that matters. So be very mindful of how you're doing that. Also, I think we talked about this on the last call, but this is the time to be, if you haven't started already, calling everyone in your database, checking in with them. How are you doing? How are you faring? How has COVID affected you? Are you guys okay? Period. That's it. Very nice and easy, no salesy. Just staying in touch, reminding them that you're there, you're thinking about them. And then, Mitch is great at this, and Chase is doing this. I mean, I'm doing this, and Erin, you're definitely doing it. But, these virtual gatherings, having some ideas about how do we gather together virtually. Our state is open now, May 1st. I see Chase is back in our office. We rolled that out to the loan officers. Now they can go back into the office if they want to. But some people are not going to they're not going to be all quick to get out there, because some of them aren't going to be cautious. We don't know. We've never really charted these waters before, so we don't even know how to handle it. But I do agree with what Mitch said early on, and that is that the way that we're doing business is really changed forever. I don't know, was it Mitch or Chase that talked about the effective employee, working at home effectively? I think it was Chase, yeah, so I think we're going to see a lot more of that. So the virtual gatherings isn't going away. I always thought it was pretty big, even pre-COVID, right? Because a lot of people, especially in our industry, don't always have time during the day to jump on a learning educational webinar or whatever. And so I was doing them at night and whatever. But now we're doing happy hours, we're doing game night. So my idea is pick something that you can create a community with, and invite your friends, invite your families, tell them, hey, bring a friend. And so some of the ideas is, one of them was that I heard was they knew a nurse or a doctor and they invited them to come and speak to about COVID in their little community. And so they did it all on a webinar. So that could be a virtual gathering, somebody that you know that can come out and just do a talk, talk about best ways to teach your kids social distancing, or, whatever the topic is. Be creative, but do something. So, and that is on the horizon, because this is going to be a lot of how we communicate today. I'm looking forward to going back to where you can hug people, and I don't know if we'll ever do that again, but now we're just going to elbow and fist bump and whatever. But anyway, anyway, I'll tell y'all, I have so many funny stories about that, but anyway. Okay. Or if you're a mom and you got young kids under 10, what are some of the things that you're doing with your kids at home? Do a webinar, help other mothers, right? Help other mothers, get them involved in your community, let them know who you are, who they are, that kind of thing. Have fun with it. This is going to be probably a big way that we're going to communicate. Some other ideas, this one I actually got from Tom Ferry, so I'm going to give him the credit. But he said, focus on withdrawn listings. When COVID started happening, people started taking their homes off the market. But, if you're an agent out there, and this is for the agents really, but, call, after this, call the agent that had that home listed and say, hey, Erin, I saw that you had this home listed. Hey, once we get past this situation with COVID, do you think that this home will be back on the market? Because I have some potential buyers that really love this area. In other words, now more than ever, it's important to network with our community, with other agents. Tap into those relationships. Yes, we're you're each other's competition, but like even in my office, we all know we love each other and we're all each other's competition, but there's so much business for everybody that if you have this mindset, like, oh, I don't want to be friendly with them because they're that's like so old school, like that, you got to just get rid of that, because that's not going to work, so network with other agents. And then, let's see, we talked about toning it down. All right, so here's some videos. Can I just give y'all some video suggestions that I thought were really cool if you haven't done any videos? So I'm talking to me because this is one of my weak areas of my business, and my coach still keeps telling me you need to do videos. Okay, but here's some great ideas. And again, I'm going to send you guys the handout so it'll have them in there. But this is not the time that we want to be hiding in our foxholes, right? You want to be a lion and the lioness. This is where you got to get out and just talk to people. So maybe start off, if you're going to say, okay, Caroline, I'm going to take the challenge. I'm going to do some videos. So in the next 2 days, do 2 videos in the next 3 days about the market, just the real estate market. Doesn't have to be long and elaborate. Just talk about what's going on in the market in very simple language so people can understand. A lot of times when we get together as a community, what do we start doing? Throwing out all these acronyms and, LTVs and VIPs and whatever. And people are like, what the heck is she talking about? So we want to keep our videos very simple and easy to understand. Those are the ones that get watched the most, right? So do that. And then from after your 2 videos in 3 days, then do 1 a week. Right? So then now you're doing a little video, 1 a week, staying in touch with your sphere. And then after that, maybe you do a little video that says 3 hacks to working effectively at home. And you can come up with like all kinds of stuff, like 3 hacks to work effectively at home with small children, 3 hacks to work effectively at home with your spouse, whatever. 4 simple hacks to make homeschooling fun and easier. I mean, we still have, even though our state is open, parents are stuck at home with their kids, with little ones. They're not going back to school, even though the state's open. So that's a whole other dynamic. So you can create these little videos that help. 5 things to do when you're stuck together. You can do an adult version, a millennial version of, activities that you can do. How about your 5 top feel-good movies during COVID that you watched? Share that, a little video. What does that take? A minute maybe to talk about your top 5 Netflix movies or something. I don't know. And then 7 restaurants that you can support locally. How about that one? That's also a good idea. All right. So, and then one of my friends said, how about the top 3 clean comedians I love and 2 not so clean? I don't know. I'm not into the not so clean comedians, and I don't really like comedians. I'm around comedians all day long, so I don't need comedians. But anyway, but that's a thought out there. If you like comedians, maybe that's what you talk about. Just the point is, get out there. So I would just end my thing by saying, I think this is the time that we need to remember that now more than ever, we have to be resourceful, right? We have to be resourceful. We have to come out of our foxholes and stay out and stay engaged. That is so critical because people need to hear from you. You're the professionals. And then also with our state being opened, I think we still need to remain safe, practice social distancing, protect yourself and your family. So practice, safety. And then also keep filling in those cannons because our business is going to be fired up. It's going to be on fire like Chase touched on and Mitch touched on. So we've got to be filling up these cannons so that we can be, blowing up when it's time because it's going to happen. It's just going to happen. I know that. So that's kind of what I would end with. And like I said, I'll send you guys a few of those little tips there, and you can.
Thank you, Caroline.
Yeah, sure. Absolutely.
I always have some great coaching. I appreciate you sharing a lot of what you get paid to do.
My pleasure.
For free. So I look forward to seeing the video. You had mentioned the video that was 3 minutes and 45 seconds.
Yes.
Yeah, I'm going to watch that as soon as you send it. I'll probably post it in my Facebook group as well.
Awesome.
And it sounds like the kind of thing that I need to share with my entire personal network, right? Because, friends that aren't in the real estate industry still need to know about this, homeowners. So thank you for all the information you guys provided today. I really appreciate it. Did you have anything else to cover and as far as the mortgage market goes before I wrap things up?
No, I think that's good. I think Caroline covered it very well with everything that's going on. I happen to be on a panel of, not a panel, I happen to be invited to a top producer real estate thing just the other day, this week. And everything that she covered was everything that they're doing, that they're talking about, being social media active, doing some other things. So we'll have some more information maybe next week.
Yep. And then just, while you were talking, Caroline, about, how to stay in front of people, things like that, I just wanted to do my shameless, Old Republic title plug. Basically just to accompany what you were saying, and make sure that any realtors on the call today realize that as a sales and marketing representative for the company, my goal is to help. So we have a ton of tools, specifically some really good targeted marketing tools. So if you're interested in maybe going after those younger generation, because we just saw those numbers a little while ago, those are very, prospective buyers, right? So we've got some targeted marketing tools. And then I also just wanted to share too, because I know we're talking about, hey, reach out to your social network, call people, stay in touch, right? So I specifically work in the Champions branch, but I'm showing on the screen right now that we have 15, I think, 14 different locations across the city. So if you're not already working with a sales rep, feel free to reach out to me, but we can always open title where your property is, where your listing is, at a different convenient office. So we've got escrow officers with just tons of experience. If you can see, even some people have some Huntsville or some Livingston listings. We've got 3 Conroe offices. So please keep us in mind. I won't take up any more of your time today, but we appreciate you joining us and hope you have a great day, everybody.
Thank you, Erin. You too.
Thanks, everybody. Have a great weekend. Have a great day. Reach out to us if you need anything at all.
Yep, sounds good. Appreciate you guys.
Thanks, guys. Have a good one.
Bye.